Hello and welcome to Analyst Hangout. I am Perpetua Fasomi Peter. It's a beautiful Friday and of course the last before Christmas. I guess you're getting ready for that already. Well, joining us today are Ambrose Samodio, the Chief Research Officer at Investigator Consulting. He's right here with me in the studio. Thanks for joining us
Thanks
today.
for having me again. Compliment.
Yeah, you can say that again. We also have Charles Fakroha, iBrandTV business analyst and a stockbroker. And of course, he's wearing his signature jacket for, you know.
Exactly.
Yeah, it's a sign that the market closed positive today.
Okay. even if it closed negative, you will still wear it. That's what you have to wear.
That's true.
Okay, and we're joined also by Mukhtar Mohammed, an investment banker and the CEO of Finance with Mukhtar. He joins us virtually. Hi, Mukhtar. Good to have you today. If you can hear me, Mukhtar, thanks for joining us today.
Thank you so much, but it's my pleasure. Santa is in the market. That's why Mr. Charles is smiling like this.
I like that. Which is a sign of Santa also.
Exactly. Okay, Oladipo Ajayi, the head fixed income, Chapel Hill, Denham. He also joins us virtually. Hello, Oladipo. Thanks for joining us today. All right, we'll get with the stock market report. And for the stock market report, you already heard the gist. Today's trading activities on the floor of the Nigerian exchange closed in the positive territory as the bulls maintained their grip on the local bourse. The all-share index increased by 0.4%, adding 206.66 points to close 49,706.09. I'd like to start with you, Charles. Talk to us about the activities, during the week.
Yes, well, it has been a very eventful week for the market and for traders, investors, and everybody alike. Yes, the Santa is in the market,
Exactly.
and this is not the first time we're experiencing this. Towards most of the end of year, we experience this kind of activity. You could see the bull run, even not even starting from this week, but carried over from last week. And particularly, yes, this is the period where investors want to, or even proprietary traders, those who trade for their portfolio, they want to realign. They want to close the market in a positive state, and you will see a lot of all this rally. But my advice will always be for the investors. Yes, don't compare yourself with traders. As the traders who are trading huge amount of money in their portfolio, those ones, they have a lot of money because it's a company portfolio.
Exactly.
Then you, as an individual investor, ensure that as you are seeing this rally, you've taken position. And of course, coming from Q3 report and all that, you've seen, and you're also positioning for, the new year. But your strategy should be meeting your investment objective. Are you looking for capital appreciation? Are you looking for dividends? Look at the fundamentals. Then I will always want to beg investors. Fundamental is very good, but also see how you can get some little knowledge, and they are available all over the place. We have a lot of seasoned analysts who do technical. I'm not advertising for Ambrose, but I think he's one of those that I will advise that they attend this program, so that you have that knowledge at least, and see when you see the movement plus the technical fundamental analysis, you can now take informed decision, because you can't afford not to make money this new year we are going into. And I am saying we are seeing the all-share index going to cross the 50,000 psychological market. It's going to cross it before, and of course, well, all things being equal, but from what we are seeing and from past experience, the market is going to close in the positive to close the year.
All right. So Ambrose, talk to us. I mean, he already took the question from my mouth. I was going to ask you, with the technical and fundamental analysis, with that in view, with that in mind, what should investors be doing right now towards the end of the year?
Mr. Charles, I've said it all, but I will just say that for you to be a successful trader or investor, you must know how to combine your fundamental and technical at any given market cycle, whether we're in a bull market or a bear market, whether the economy is in a boom or the economy is in a gloomy state. You must know how to combine to know where the economy is and the sectors and industry that was supposed to benefit from that cycle we are. But I believe that this is the 6th week we are seeing a bull run for 6 weeks, and it's expected that design investors that have entered the market with objective. So now this is the time for you to cash out what your profit. Don't be carried away with up market. I tell you that don't fall in love with up market. Don't fall in love with down market. Always know that your goal to enter the market and exit is always there to guide you, so that when you hit your profit target, you come out. The major problem in our market today, especially in Nigeria NGS, is that most investors know when to buy stock, they don't know when to sell. That is why when the market take them up, that's the market to bring them down, and they'll be complaining that, oh, I invested, but I'm not making money in the market, because you fail to.
Before you continue now, is it every investor that should be speculative? Should everyone go in, buy, sell, and all of that? Are there people who want to remain there?
Yes, we have different investment objectives to be in the market, but I'll tell you that on the wrong, whether you are a trader or investor, you are in the market to make profit. Yes. These are the two things. Then if you are a long-term investor that bought a stock for 5 naira and the stock is going as high as 10 naira, and you know that the probability that stock pulling back into that 5 naira is high, then when you touch the 10 naira, you are a long-term investor. I don't go there. You now keep it there. It has to bring you down again to that 5 naira. It's better to have sold at that 10 naira. When it comes back to 5 naira, with that money, we are going to acquire more of that company ahead of the other dividend payment. You now get more dividend. That means you are growing your portfolio in 2 ways: capital appreciation and dividend income. These are the things to buy. So I say, as an investor, you must balance your portfolio by knowing that this is the time I'm entering, the time I'm exiting. But the good thing that at this period, you know that end of the year, like I said, that the fund managers want to close the year positive. Yeah. But the good thing is that for end of year, December 31st is different from other quarterly end, in the period, because at this period, the quoted companies themselves want to close higher. For example, I said it here in this studio that life of Zenith Bank want to close the year either within 28 naira or 31 naira. Go and check the data for the last 5 years. 27, 28, 26, 32 naira. That means now they're already at 24 something. There's nothing that before the end of the year, which will have only 3 trading days between Tuesday and Friday next week. For investor that is there, just come by next week. As you're hitting 25, 26, you sell first. Because when they announce the result in February, it put back again. You can enter and buy more of the to collect their dividend. Then I said, as an investor, don't be carried away with what up market or that. Know exactly when to see the market. Don't be everybody not singing Santa Claus is rally since November. I think Santa Claus in the market till now. Yeah. For me, take your profit. And also the possibility that this market will continue in 2023 is very, very high. Why I say so? Most of the companies on the exchange are having a high dividend yield, 1. And 2, if by God's grace we have the election right, whoever that comes as president after the election, but expect to see what we call post-election rally to come again, because we're expecting that will be what we call economic reset, financial market reset, and that will create opportunity for investors to buy into good industry or sector. For me, don't be carried away with market now. Take profit, come back, understand the market, like I said, acquire knowledge.
All right, interesting. That's a very good one. Well, Mukhtar, beg your pardon. I was going to ask you a question, but before then, I'd like you to comment on what Ambrose just said.
Well, Ambrose is maybe a short-term trader or a trader. If we are designing investors like us, that we are looking at passive income, or we are looking at building passive income over time, the down market is always very interesting. We enjoy the down market and the up market. So it depends on which space you are. So some people are traders like Ambrose. You go in there, make money, come out, go in there, make money, come out. And I think that's the bane of Nigerian investors, and that's why we have not seen those bullish runs that we used to see before, especially when you have foreign investors. But for me, I think the basic thing, the good thing about the market is that the market is doing well. Santa is in the market. If you're an investor that wants to take profit, good time to take profit. Exactly. If you're an investor that wants to invest based on fundamentals, good fundamentals are there for you also. So basically, I think it's a good time for profit taking, and also it's a good time, not so much a good time for those that want to buy now. I agree with Ambrose totally. If you are not in the market before Santa, come wait and see whether you'll be able to enjoy election rally, what will I call peaceful election rally, because there's always a peaceful election rally after the election. You see those rallies that comes with the election. So maybe you wait for that period. But for now, I think I agree with Ambrose totally. But now market is an interesting market for passive investors like us.
All right. Thank you for that one. Oladipo, if you're with us, I'd like to also hear your thought.
Yeah, actually, on that, because I have network issue.
Okay, Oladipo, I didn't hear you. If I heard you correctly, you were saying you have a network issue over there.
Yeah, I'm with you now. I'm with you now.
Oh, okay, so you're saying you couldn't hear what you were saying. All right, well, we're talking generally about the market, and Ambrose had his own perspective, and I wanted to know what you have to say. Ambrose was talking about how that for him, people should get into the market and just wait until maybe when there is an increase in the share price, you sell, and then you wait again till there is a pullback, and then you get into the market again. He was talking about things like that. And when Mukhtar was responding to that, Mukhtar said he's a trader, a short-term investor, people who just want to take profit and just keep the cycle going. So I wanted to hear your own thought about that.
Yeah, I think I will actually toe the line of Mukhtar because Ambrose is purely a scalper. He's always in the market at any particular point in time. So he tends want to go in, come out, go in, come out. But that's most time not the attitude of most people that want to invest. Most people that actually want to invest, some of them they are short to medium-term investors, so they are looking for opportunities in the market. They are looking for underpriced instruments that they can put their money in and actually maybe wait a bit while the instrument or the stock actually appreciates in value. But I think Ambrose is other way totally because he is always in the market and most investors are not totally in the market.
All right. Well, very quickly, bring us up to speed with the fixed income market. What happened during the week?
Yeah, for fixed income market this week, the market remained very bullish, like what we actually highlighted last week. If you remember, we mentioned that looking at how the market closed last week, we expect the same momentum to actually continue this week, and that's actually what happened in the market this week. The market opened very aggressively at the beginning of trading section on Monday, and until the close of market yesterday, we noticed that most instruments on the bond space are shared close to about 50 basis points. And also, that is also obtainable in the treasury bills market, as most investors are actually operating between the short term and the long end of the bills market. And but what we noticed today is that markets actually tank a bit today, and we feel this is on the back of expected CR debit to bank today. So as a result of that, we noticed a bit of sell down on the market, and we noticed a bit of pullback in yield in the market today. But what we feel that we think that is just for a short time, as we expect a bit of more activity next week, knowing fully well that will be the last week of the year. And also this week, the FAC was credited into the system, and this is about the biggest FAC for the year. The FAC for the month of November is about 902 billion. And the part that hit the system is close to about 600 billion. And if you look at that level of liquidity in the market, it gives you an insight to how market would react to that. And that's exactly what happened in the market. Thanks.
All right, thank you so much. Well.